Hello, I'm Cindy Burkhart. Today I'd like to talk to you about PMI. What is PMI and how does it work? So PMI stands for um, Private Mortgage Insurance. So what does that mean? Who are we insuring? Well, we're insuring the lender. We're going to ensure that you are going to pay your bill. So when you go to buy a house and you don't maybe have enough down payment, let's say it's a conventional loan and they like to see 20%. Maybe you don't have 20%. So to make up the difference, they put a little insurance in the policy. You pay a little bit more to make up that 5% that you might be lacking, and you'll make that payment with your mortgage. So basically it will be rolled into the mortgage payment. So you'll still know what your house payment is when you start to factor in all of those things from the lender. So is it forever? Does it stay there just because you didn't have it up front? So what does it depend on? Sometimes it depends on your credit history. So maybe if you had many loans before and you always paid them off and, car loan after car loan or, home equity loans that you've already always, you've never been late, you've been great. So the bank looks at all of those things. They also look at the loan amount. Let's say you only have 10% or you only have 8%. Well, that puts the bank at more risk. So for that, you're going to probably pay a little higher cost in the pre-mortgage insurance or the private mortgage insurance. So it is not a forever thing. Usually once you hit the 20% equity threshold in your loan, so now you have more equity than you did obviously when you bought it. It's might be 5 years before you hit that point, but then that falls off. Then you just have your regular mortgage payment. So the private mortgage insurance isn't forever. It's not a bad deal because it gets you into a home sooner. So if the prices of homes still going up, it gets you into that house a lot sooner than having to wait to maybe struggle to get that other $5,000 or $6,000. You kind of get to a point and then Murphy's Law happens and it rolls you back. And then you get there and then Murphy Laws roll you back. So it's better to just pay the private mortgage insurance, get in the home, build the equity. When you hit that point, it falls off and you're not wasting your money in rent. So if you have any other questions about that, or if you don't quite qualify and you want to ask more questions about that, I'm here for you anytime. Give me a call. My phone number is 352-601-8627. I look forward to speaking with you soon. All right.